of our syllabus, chapter 12, corporate and fraudulent behavior. In how companies can make fraud, how companies involved in fraudulent activities. We're going to discuss in this chapter what are the criminal offenses, what are the civil offenses we need to discuss, and what could be the consequences if companies involved into fraudulent activities. So corporate and fraudulent behavior. The fraudulent behavior are of four types: insider dealing, money laundering, fraudulent trading, and wrongful trading. Insider dealing. What is insider dealing? Insider dealing, if any of the employee of company or director, manager of the company, they are having some secret information about the company, and by using that secret information, they got some advantage. So that is called insider dealing. Mean you are the accountant of the company. You are preparing financial statements, and while preparing financial statements, you have realized company profit will be more in this year. Company financial statements will show better results in this year. And after issuing financial statements, publishing financial statements to the general public, company share price will go up. So before issuing financial statements, you have bought company shares at lower price so that after publishing financial statements, you can sell at a higher price. So this is called insider dealing. Trading doesn't mean a company inventory purchase sale. Trading mean company share purchase sale as well. What is money laundering? We have discussed money laundering in first paper of ACCA Business and Technology. Money laundering. Converting black money mean illegal money into legal mean white money is called money laundering. This is also if business is involved, companies involved in money laundering. So this is fraudulent activity. What is fraudulent trading and wrongful trading? Fraudulent trading is a criminal offense, while wrongful trading is a civil offense. Criminal offense and civil offense. Criminal means serious offense, while wrongful trading is a civil offense and not that much serious. What is the fraudulent trading? You are aware company is not a going concern. Company will not continue in next 12 months. Company will be ending soon. But you have showed wrong records to the creditors and perform transaction with the creditor to deceive them so that you can recover as much money as you can from the creditors. This is called fraudulent trading. Mean knowingly you have deceived other through company transactions. What is wrongful trading? You are aware company is in financial difficulties. But if we can buy some goods from creditors on credit basis, we can recover company operations. I mean, company is having some financial difficulties. But if we do some transaction on credit basis with the creditors, so we can avail some money from the creditors. So based on that, we can recover the company. But in fact, you couldn't recover the company. And the creditors lost their value. So this is called wrongful trading. Mean you didn't deceive the creditor. Here you deceive the creditor. So if you are performing a transaction by deceiving others, that is called fraudulent trading. It's a criminal offense. But if you are aware about certain truths, but you didn't disclose that truth and perform some transactions, with the intention to recover the company, that is called wrongful trading. But you didn't disclose to the creditor like a company is having financial difficulties. So these four topics we need to cover. What is insider dealing? The value of share reflect the profitability. Mean if company is earning more profit, share value will be high. If company's profitability is low, share value will be low. And future prospects of the company. This type of information is usually only available to prospective purchaser after it has been made available public. Mean whether company is having bright future or poor future, you can provide this information to investor, but by publishing your financial statements. If before publishing financial statements, this information is with management employee of the company. However, if a prospective purchaser could gain access to such information before it was made public. Why? Because that investor, close friend or brother is working in the company by whom he got this insider confidential information. This could anticipate which maybe price was likely to move and thereby make a profit. This is known as insider dealing. Insider dealing has been made a criminal offense as it is perceived to undermine the integrity of the stock market. And not only who is having this insider information, company directors. Insider dealing is a crime under Part 5 of Criminal Justice Act 1993. Criminal offense. The Criminal Justice Act 1993 sets out the three distinct offenses in Section 52. An individual will be guilty of insider dealing if they have information as an insider and they deal in price affected securities. Securities mean shares. On the basis of that information, they encourage another person to deal in price affected securities in relation to that information. Mean he asked his friend or brother to buy company shares. They disclose the information to any other than in the proper performance of their employment office or possession. Mean they disclose the confidential information to any other party. Because being an employee of the company, you should be loyal to the company. Dealing is defined as Section 55 as acquiring or disposing of securities, mean buying or selling shares. This is dealing. Insider in confidential information. Whether as a principal or agent are agreeing to acquire securities. What is insider information? Define inside information as information which relate to particular securities or to particular issuer of securities. Is specific or precise, has not been made public, confidential. If made public, would be likely to have a significant effect on the price. Who's insider? A person has information as an insider if they know that it is inside information and they have it from an inside source. A person has information from an inside source if they have it through being a director, employee, or shareholder of an issuer of security. They have it through having access to information by virtue of their employment, office, or possession. Or the direct or indirect source of information is a person within either of these categories. Mean could be auditor as well. What could be the defenses if you are facing any case of insider dealing? What could be the defenses? Mean how you can save yourself by explaining that I was aware, I didn't use that. So when dealing in securities are encouraging another to do so, a person will not be guilty of insider dealing, where the individual is able to show that they did not at the time expect the dealing to result in a profit or in the avoidance of a loss in relation to the insider information which they knew. I mean, if directors have bought, sold shares, he bought before issuing financial statements, he sold after on high price, and somebody have sued him. He used inside information. So if you can prove like you are not aware about the profit, you didn't use, then you can make defense in your favor. It is also a defense where the insider believed on a reasonable ground that the information has been disclosed widely enough. Not only I was aware, many people were aware of it, to ensure that none of those taking part of the dealing would be prejudiced by now having the information. Where the defendant is able to show that they would have dealt with the securities in the same way or encourage another to deal with the securities in the same way, even if they had not possessed the insider information, I deal with the shares in the same way as other people were, in normal situation. But if he is approved of insider dealing, what could be the consequences? On summary conviction, an individual found guilty or insider dealing is liable to fine not exceeding the statutory maximum or maximum of 6 months imprisonment. Summary offenses and indictment. It was summary offenses not serious, while indictment serious. On indictment, the penalty is an unlimited fine, serious offense, and a maximum of 7 years in prison. Summary offense is less serious. Indictment, highly serious offense. If the individual concerned is a director, they are in breach of their fiduciary trusted duties and may be liable to account to the company for any profit made. Whatever the profit he made by dealing with the security shares, he need to pay back to the company. There's another concept called market abuse. Market abuse means manipulating share value. Manipulating share value means share value is different, but you have explained this is different. This is manipulation in share. Changing share value knowingly. The Franchise Services and Market Act 2000 introduced concept of market abuse behavior in relation to any qualifying investment. Market abuse is defined as a behavior in relation to any qualifying investment. Qualifying investment means shares. Investment in shares is called qualifying investment. Likely to be regarded by regular users of the market as falling below the standard reasonably expected of a person in that position, and the falls within at least one of three categories based on the information not generally available to user of the market, which if available to regular user would be likely to be regarded by him or her as relevant in regard to the terms on which deal in those investment. You have provided wrong price value to the users. It is likely to give a regular user a false or misleading impression as to the market value of such investment. In future there will be high demand, while the company reserves were not that much of having high demand. Is regarded by a regular user as likely to distort the market in which such a investment you try to change the buying selling of your securities by stating the wrong price. Qualifying investment are those which are traded on UK prescribed market as well as those traded on other European regulated market, listed company shares. The Financial Conduct Authority have also drawn up a code of market conduct to detail the way in which market abuse can occur. There are 7 types of behavior which can amount to market abuse. What are market abuse? Insider dealing is market abuse. Improper disclosure. You are aware company reserves will not be that much that can help to increase company share price. But you advertise like a company is having a so much bright future. Company will produce a highly good results as compared to previous year. So this is called providing improper disclosure. Or improper disclosure mean if as per accounting standard, there are certain disclosures required in the financial statement, but you didn't disclose or disclosed wrongly. So those will also be called improper disclosure. So this is where an insider improperly disclose inside information to another person and is also classified as insider dealing. Mean that disclosure is required by law, by standard, but you didn't disclose. Misuse of information. Mean you are having information, but you misuse that. This is any behavior based on information that is not generally available but would affect the investor decision about the terms on which to deal. This is also a type of insider deal. Manipulating transaction. Mean at year end, you performed some extra transaction, fictitious transaction, so that you can produce good results to change the manipulate the share price. So this is a trading or placing order to trade that give a false or misleading impression of the supply or demand for one or more investment, raising the price of the investment to an abnormal or artificial level. Manipulating devices. Manipulating devices mean you used some tactics to produce some good results so that you can change the share price of the company. Like instead of paying to the creditors at year end, you delayed payment after year end so that you can show some cash in the balance sheet at year end. Instead of paying a tax at the year end, instead of placing order for the inventory at the year end, you recorded that order in next year so that in current year you can increase profit. This is called manipulating devices. So this is a trading or placing orders to trade which employs fictitious device or any other form of deception or contrivance. A person buys shares and then spread misleading information with the view to increase the price. This could give investor a false impression of the price of shares and lead them to make the wrong investment decisions. You bought as a company shares through demand, you try to increase the price, while in fact, share value is not that much. Dissemination. Dissemination means to spread information. Mean you spread some false information so that investors should do something, should act on that information, and through the act of investor, share price could be affected. This is called dissemination, means spreading some information, false information. So this is by giving out of information that conveys a false or misleading impression about an investment or the issuer of an investment where the person doing this knows the information to be false or misleading. A person uses an internet bulletin board or chat room to post information about the takeover of a company. Like you spread the information, this company is going to be takeover by Apple. While in fact, there is no chance Apple will take over this company. Ultimately, investor try to invest more in this company because after takeover by Apple, ultimately share price will go up. So the person knows the information to be false or misleading. This could artificially raise or reduce the price of the share and lead to people making the wrong investment decision. Distortion and misleading behavior. This is behavior that give a false or misleading impression of either the supply or demand for an investment, or behavior that otherwise distort the market in investment. Mean you spread the information, company will issue some new shares after year end. And based on that, if investor acted and their action has resulted into change in share price, so this is called market abuse, distortion, and misleading behavior. There is a moment of an empty cargo ship. I mean, empty cargo ship was moving from one place to another. It was covered, and you spread the information. We are getting some more stock from other country through this ship, and you have shown the pictures of the ship, while in fact that ship was empty. And based on that information, I mean, company will be having more stock, company will sell that stock, there will be huge profit. Investors invested into the company. So this is called distortion and misleading behavior that is used to transport a particular commodity. This could create a false impression of changes in the supply or demand for the commodity of the related future contract. It could also artificially change the price of commodity or the future contract and lead to people making the wrong investment decisions. Consequences: market abuse as defined in the code can result in unlimited fines and a public reprimand by Financial Conduct Authority under civil law, meaning imprisonment. So, what are the types of public abuse? Insider dealing, improper disclosure, misuse of information, manipulating transactions, manipulating devices, dissemination, distortion, and misleading behavior. So one topic, insider dealing, we have. Now moving towards money laundering. What's money laundering? Process of converting black money mean illegal money to white money mean legal money. Money laundering is a process of converting black money. Black money mean money generated through illegal sources to white money. White money mean legal. It is a criminal offense as well. How black money can be converted into white money? It's a process. So this process is having three stages. Placing, layering, and integration. Money laundering process is having three stages. Placing means investing black money into any legal business. This stage is called placing. Layering means performing more and more transaction on that money so that true origin of money can be hidden. In from where this money was generated, that can be hidden, performing more and more transactions, especially foreign transactions. In foreign transactions, when money moving from one country to another country, so there are two country. One is a recipient, mean money moving from country A to company B. So this is recipient country. The recipient company is always happy that money is coming into the country. I mean, there is addition to the country. From where that money is coming, why that money is coming, they don't bother. They are happy money is coming into the country. Like we are receiving any money from whatever source, we are happy. And the person who is giving us money, from where he has got this money, why he is paying you that money, you don't bother. You are happy receiving that. So they are happy they receive the money. And now that money will be transferred from this country to, they will be happy money is coming. Why? So what are the original source of the money? That is completely hide. Are performing more and more transaction to hide the true origin of the money. Then integration mean to withdraw that money from the business and use like a legal money. So placing investing illegal money into a legal business. Layering performing more and more transaction to hide the true origin, and integration to withdraw that money and use like a legal source. Okay. And in UK, money laundering is a criminal offense. Everywhere, but we are studying UK studies. So according to UK, money laundering is a criminal offense. All the illegal monies around the world where people are bringing, they are bringing to UAE, investing in property here. So UAE mainly used for layering purpose. Every country is having some restrictions. How much money you can take with you for traveling purpose, how much maximum limit you can transfer outside a country or transfer to this country. But in UAE, there are no such limits. Yeah. There is a rule like you can travel maximum with $10,000, but in UAE, nobody checked you at the airport. You can travel with whatever money they don't check. Normally they don't check. And they don't. So, what is money laundering? There are three stages involved. In a UK, there is a body called SOCA, Serious Organized Crime Agency. Serious Organized Crime Agency. If being a professional, you have found any of your employer, employee, or party to with whom you are associated, they are involved in money laundering, it is your professional duty. You need to report to SOCA, Serious Organized Crime Agency. Even if you are running any accountancy or auditing firm business, you must be having a person that will be called MLRO, Money Laundering Reporting Officer. I mean, if you are performing some accountancy services to any of the client and you found that client is involved in money laundering, to whom you should report? To SOCA. From your firm behalf, who will report from your firm? Your firm employee, MLRO, he will report to the SOCA. I mean, this person will verify whether there is a money laundering, not only actual money laundering. If there is even suspicion of money laundering, you need to report to SOCA. And who will report from the organization? MLRO, Money Laundering Reporting Officer. So let's discuss a few things. So what is money laundering? Is the process by which the proceeds of crime, mean illegal money, are converted into assets which appear to have a legal rather than an illegal source. The aim of distinguishing the source of the property, mean to hide the true source from where that money was originated, is to allow the holder to enjoy it free from suspicion as its source. Money laundering is primarily regulated by Proceed of Crime Act 2002. The legislation imposes some important obligations upon professionals such as accountant, auditor, and legal advisor. Mean it is our professional duty. If we find any money laundering association to any person, we need to report to legal body SOCA. These obligations require such professionals to report money laundering to the authorities and to have a system in place to train staff and keep record. Mean audit firms, accountancy firms need to train their staff. They need to make aware their staff regarding money laundering so that they can find during work and report to the bodies. And there are three stages involved of placing, layering, integration, placing the initial disposal of the proceed of criminal activity, mean dirty money, illegal money, black money, into apparent legitimate business activity, mean investing into legal business. Layering transfer of money from business to business, mean performing transaction are place to place in order to conceal its initial source, mean hide through origin. And integration, the termination of the previous proceeding through which the money takes on the appearance of coming from legitimate source, mean withdrawing money from that business and using like a white money. The Proceed of Crime Act 2002 created three categories of criminal offense: laundering, failure to report, and tipping off. Mean if you are aware your client is involved in money laundering, this means there is a legal requirement you need to report to SOCA. If you didn't report, you will also be involved in criminal offense. You found that your client is involved in money laundering, and there are four directors, all four involved in money laundering. While reporting to SOCA, you reported about two directors, and for two directors, you didn't report. Mean you provided missing information or wrong information. This is called tipping off. You are aware your client is involved in money laundering, you need to report to SOCA. You didn't report, mean holding to information. This is also called tipping off. Or mainly, what is tipping off? You are aware your client is involved in money laundering. Instead of reporting to SOCA, you try to discuss with your client. Oh, I know you are involved in money laundering, mean you have given him a chance to hide that. Or you have given him a chance so that he can give bribe to you to keep your mouth shut. This is also called tipping off, mean providing information on wrong channel. What is the right channel? You should report to SOCA. But if you are providing information to the money launderer, like I am aware about you are involved in money laundering, so this is also called tipping off. Mean to hold true information, to provide wrong information, or providing information on wrong channel is called tipping off. So laundering is an offense. It is an offense to conceal, disguise, convert, transfer, or remove criminal property from England, Wales, Scotland, proceed of crimes. Concealing or disguising a criminal property, including concealing or disguising its nature, source, location, disposition, moment of ownership, or any right concerned with it. Criminal property is defined as a property which the alleged offender knows or suspect to constitute or represent benefit from criminal conduct. Property mean money, black money. Criminal conduct is defined as conduct that constitute an offense in a part of the UK, would constitute an offense in any part of the UK if occurred there. Failure to report mean if you fail to report to SOCA, individual carrying out a relevant business may be guilty of an offense of failing to disclose knowledge or suspicion of money laundering where they know or suspect or they have reasonable ground for knowing or suspecting that another person is engaged in money laundering, the proceed of crime. The offense only relates to individuals such as accountants who are acting in the course business in the regulatory sector. Any individual who is covered is required to make disclosure to a nominated money laundering reporting officer MLRO within their organization or directly to the National Crime Agency, who is the National Crime Agency of UK, SOCA. So, what is tipping off? State that it is an offense to make a disclosure likely to prejudice a money laundering investigation. Mean you disclose to the money launderer, oh, I am aware about you are involved in money laundering, so that he can hide. So it therefore covers the situation where an accountant informs a client that a report has been submitted to the National Crime Agency. Or you have reported to the SOCA, and then you inform the client, I have provided your report to the SOCA, so that before investigation he can hide the true things. What could be the penalties if you couldn't disclose or you are involved in tipping off? The maximum penalty for offense of money laundering is a 14-year imprisonment. Mean the person who is involved in money laundering, for him there will be 14-year imprisonment. Failure to report to publish on conviction by maximum of a 5 years imprisonment. If being accounted you didn't disclose, are you involved in tipping off? 5-year imprisonment. Tipping off is punishable on conviction by maximum of 2-year imprisonment or a fine, but for tipping off, there will be 2 years imprisonment as well as fine. So there are some money laundering legislation defined in the UK. At a minimum, an anti-money laundering program should appropriate mean they have defined anti-money laundering legislation. And according to anti-money laundering legislation, money laundering and terrorist financial risk assessment mean business need to perform risk assessment. They need to assess their business regarding risk of money laundering. Implementation of system, policies, controls, and procedures that effectively manage the risk the firm is exposed to mean they need to implement some controls, policies so that they can prevent, detect issues of money laundering. Compliance with customer due diligence. If you are going to have a contract with a new customer, you need to check his due diligence. Due diligence means his honesty. Whether he is a legal person, he is performing legal transactions, he is not using any illegal money. Due diligence means finding honesty of the customer. Enhanced due diligence. Enhanced means furthermore you need to investigate if there are more chances of money laundering, especially for political persons, because they sometimes involve more in money laundering. And simplified due diligence requirement. Simplified means low level of transactions. So enhanced record keeping and data protection system policies and procedures. You need to keep the record of your system of your transactions. Money laundering and terrorism financing risk assessment. A written risk assessment must be carried out to identify and assess the risk of money laundering. The risk assessment must take into account information provided by the supervisory authority on risk factor in sector. The following risk factor must be taken into account: the firm's customer. Who are your customer? They are legal persons. They are not involved in illegal transactions. The countries are geographic where the firm operates. The firm's products or services. The firm's transactions and the firm's delivery channels. The risk assessment should be used to develop policies, procedures, and control to mitigate the risk of money laundering and apply a risk-based approach detecting and preventing money laundering. Officer responsible for compliance. Firm must appoint money laundering compliance principal who will put some risk policies, as well as MLRO who will report money laundering to legal body SOCA. The MLRO and MLCP may be same person if the MLRO is a sufficient senior. Could be same person, could be different person. Employees, the firm must assess the skills, knowledge, conduct, and integrity of employee, honesty of employee involved in identification, preventing, or detecting money laundering. Otherwise, might be they have a find the client is involved in money laundering and they involve themselves as well because client bribe them. Staff training must be provided on ongoing basis in how to recognize and handle transaction activities which may be related to money laundering. And if any of the business is going to have a contract with the customer, you need to perform customer due diligence, mean check his honesty, check whether that business is registered proper, check what are the transactions that business is involved, what are the sources of their money, from where they are getting money, from for where they are sending money. There are no chances of money laundering. Enhanced due diligence mean if your customer is a politician, there are more chances of money laundering. So you need to perform even more due diligence. Even you need to check who are the persons associated with them. You need to check them as well. And simplified for normal business. Officer for Professional Body Anti-Money Laundering. The Office for Professional Body Anti-Money Laundering Supervision was established by the government in 2018 under the OPBS regulation. The regulation gives OPBS duties and power to ensure that the accountancy and legal professional body anti-money laundering supervisor meet the standard required by money laundering regulation, and they have power to investigate those that don't. Mean they need to check whether accounting audit firms are having a person as a MLRO and they are training their staff, giving information their staff regarding money laundering. Is bribery. Facilitation payment. In giving money to other to get some advantage, undue advantage, not advantage, undue advantage. So that is called bribery. It is also a criminal offense. It is corruption. So bribery is an act implying money or gift given that alter the behavior of recipient. It is the offering, giving, receiving, or soliciting of any item or value to influence the action of an official or other person in charge of public or legal duty, especially to the person who is in charge of public. The Bribery Act 2010 came into force on 1st July 2011. The act creates four offenses. Bribing a person to induce or reward them to perform a relevant function improperly. Requesting, accepting, or receiving a bribe as a reward for performing a relevant function improperly. Using a bribe to influence a foreign official to gain a business advantage, like to custom official, to release your goods early as compared to other competitors. A new form of corporate liability for failing to prevent bribery on behalf of a commercial organization. Commercial organization has a wide meaning and include partnership, limited liability partnership, and companies which carry on business. What could be the defenses if you are found guilty of bribery? How you can save yourself? A commercial organization, it is a defense to have a place adequate procedures to prevent bribery. If you are having some policies, rules implemented in the organization to prevent bribery, then you can save yourself. This may include implementing anti-bribery procedures. It is important that firm consider what adequate procedures are most appropriate for their firm given the risk they face and the way they run their business. The procedure should be proportionate to the risk. post. There is a anti-bribery legislation, and according to anti-bribery legislation, business need to follow some policies. Those policies are called A, B, and C, anti-bribery and control policies. A, B, and C policies that business need to follow to control bribery in the organization. What are those policies? Might be those are not in our syllabus. What could be the penalties? The penalty for individual is maximum sentence up to 10 years if a person found involved in bribery. And for commercial organization, mean for business, they may be unlimited funds. Deferred prosecution agreement. Deferred mean future, mean delaying some of the transactions. Delaying some of the agreements will be called deferred prosecution agreement. Deferred prosecution agreement became available to prosecutors in the UK in February 2014 under the Crime and Courts Act 2013. A deferred prosecution agreement allows a commercial organization to settle allegation of criminal economic activities without being prosecuted and without any formal admission of guilt. Mean if organization is proved that they were involved in illegal transactions and you have ordered that this organization is innocent